Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Magna Mining. Magna Mining is traded on the TSX.V under the ticker NICU and on the OTCQX under the ticker MGMNF. And I'm joined today with the CEO and Director of Magna Mining, Jason Jessup. And Jason, it's great to get you back on the KE Report. We just talked about 9 days ago, so in that period of time, you released two very important press releases, so it was important to circle the wagons back up here. And let's dig into the first release that you put out to the marketplace on the 27th of August, really highlighting the second quarter operating and financial results. Now, obviously, this is coming out of McCreedy West, your operating mine, copper mine, and nickel mine in Sudbury. But we're going to get into some of the exploration at this project as well as some exploration at the Levack Mine. But from an operations standpoint in Q2, just as a reminder for people listening in, you're kind of still doing some residual mining that was left over from the KGHM plan where you acquired this asset, but you're also still doing a lot of development work underground. And you've mentioned that you're more interested in moving waste or in getting it out of the way and getting all the development stopes set up so that you can really press on the gas pedal with production, especially kind of as we round out the end of this year and head into next year. But you still had some different areas you were mining from in Q2. Maybe break down for us the key takeaways from operations in the second quarter.
Yeah, absolutely, Shad. And yeah, great to be back on. Just 9 days later, lots happening, and we're a pretty, we're a busy company. So Q2, in my mind, was a very successful quarter. It was our first full quarter, and we started out the quarter a little under the gun. There was very, very little development done by the previous operator in January and February, which really restricted the areas that we had optionality to mine. So, we did some nickel mining from our Intermain Nickel Zone that had been developed by the previous operator, primarily because until we could get development rates up and open up new areas in the 700 complex, we didn't have a lot of other options. This is what we had expected going into it. We came in eyes wide open, but again, had a plan to focus on development, get the crews ramped up, fully staffed up, make sure that we have the availability of the equipment we needed. And that's what we did. So in April, the production and the copper equivalent pounds were hampered, but we were able to ramp up our development from, in the previous month, about 7 feet of development in March per day to around 14 feet of development per day in April to, by the end of June, in June, we had an average of over 17 feet per day. So that's a huge improvement. And with that additional development getting in place and ramping that up, it started to open up some optionality. We could do better on production, focus more on the copper rich 700 zone. So production really picked up for copper payable pounds in May, and we had a fantastic June. And if we look at our copper equivalent pounds that were produced, of the approximately 3 million copper equivalent pounds payable in that quarter in Q2, about 1.4 million of those came from June. So it was a great first quarter for us. Obviously, this year is really about setting ourselves up. So we put out guidance back in July for the second half of the year, and that's the messaging. That's what we're doing. We are ramping up production, but we are focusing on development, focusing on setting the mine up. And this was a mine that was, non-core. It was not getting as much capital as it needed. I don't think it got the management attention it needed. We were addressing all of those issues because I know from operating this mine previously during my tenure with FNX Mining back in 2006, 7, 8, this mine has a lot of potential. There's still a lot of metal in the ground, some really good grades, and I'm really looking forward to 2026 because we're doing the right things right now to ensure that 2026 is going to be a fantastic year for this mine.
Yeah, as you can see the ramp up in the table one that you included in the press release, and I may put a link to that down below under the interview for people listening in. But you can see that, to your point, in April, kind of strapped there, we had the 440,000 pounds of copper payable, but then in May, 1.1 million pounds of copper equivalent, and then June, 1.4, more than that copper equivalent. So you can see the ramp up there just from April to June. And like you say, June doing half of the overall production for the quarter. So you can see that you're making progress on the development. But one follow up that I guess I would ask is, since you were mining from both the Intermain Nickel Zone and the 700 Footwall Copper Zone, obviously copper is the focus right now, and you were just finishing up some of that nickel mining, as you mentioned, based on the development that the prior operator left you. But it also highlights a great point about this mine, Jason. You can actually kick on the focus in nickel whenever you want based on nickel prices. But right now, while the high copper and PGM and gold prices are there, you can really focus on the 700 footwall zone. So maybe talk about the optionality of having these different zones within McCreedy West.
Yeah, absolutely. Like it is a very polymetallic mine, but not just polymetallic where everything is equally distributed throughout the mine. We have a completely separate zone called the Intermain Nickel Zone, which is primarily nickel, sitting on the contact of the SIC in Sudbury. And then in the footwall, we have two separate footwall zones. We have our 700 copper zone, which primarily copper with PGMs and a small amount of nickel. And then we have our PM zone further down in the footwall, which is primarily precious metals with a little bit of copper and nickel. So we can really focus on commodities as we see, which ones can provide the best economics for the mine. Right now it's the 700, but as we've seen over the last 10 years, you can have major swings in the price of nickel, from a number of external factors. And when we do see that upswing in nickel market again, and it will happen, I'm positive of that, we can take advantage of it very quickly, and we can turn back on some of these nickel mining areas in a matter of weeks and start shipping that to either Vale or Glencore's mills here in Sudbury. So we have that kind of flexibility and optionality, which is great. And based on my experience, again, previously with this operation, back in 2006 and 7, when we were sort of the height of that nickel boom, we took full advantage of it, and we were mining, approximately 1,000 tons a day from the Intermain Nickel Zone. We were mining another 200 or 300 tons a day from the 700 zone, and mining another 1,000 tons from the PM zone. So we were mining all three of these zones, mining well over 2,000 tons a day, and making lots of money on all those commodities. So we do have that kind of optionality, and we do have the resources in the ground, I believe, to do that again.
Well, and let's talk about how those resources in the ground continue to grow through exploration. When we had circled up last time, we were talking about some of the exploration results coming in from that 700 footwall zone, but also some of the action that you thought was down in that precious metal zone, that higher content of the platinum, palladium, and gold. So remind us of some of the exploration success your team has been having really at both areas and what you can be focused on as you continue to push into the western part of this.
So yeah, we're, a couple of horizons that we're really excited about. So you mentioned the western part. So between our 700 footwall zone and the boundary between Glencore, there's an area there of a couple hundred meters where there's been very, very little drilling done. A few holes from surface, a couple holes historically by Inco that had tested further down from surface, but really very little drilling. And there has been some good indications of copper mineralization from the 700 extending out in that direction. But during the Inco tenure, that wasn't a focus, chasing copper veins out into the footwall. So we are getting very close with our development on that western side to give the platforms to properly drill this off. And this will be the first time since the mine closed that there are platforms underground to test that western side for the drilling. And so we're pretty excited about that. And we would expect to be starting to get drill results from there in Q4. And that'll really help, I think, paint a picture for what 2026, 2027, 2028 could look like beyond the resources we currently have. So that's exciting drilling. The other place we're excited about, as you mentioned, some of these more narrower copper intersections that are quite high in copper that we announced back on August 6th. But what really caught our attention was the elevated precious metals. And typically in McCreedy West Mine and many Sudbury mines, when you get into the footwall further from that SIC contact, deeper into the footwall, so not necessarily deeper from surface, but just further back into the footwall from the contact, you get higher tenor of precious metals. And this area that we announced back on August 6th, a couple headline holes, those are in the very much the footwall of the 700, sort of as far back as we've drill tested. And we're seeing very good grades. You can look at the press release, but typically sort of around 1 ounce plus of precious metals over relatively narrow widths. But these are copper and precious metal grades that can support, we believe, some selective mining methods. Where we're mining, 2 to 3 meters wide, and we think can provide a meaningful source of payable copper equivalent pounds, in the future. So we're going to set up a third drill later this year to really start expanding on those hits, and hopefully we can put together a plan to start exploiting them in 2026. And this could be, very material to our plan at the mine, and add some significant copper equivalent pounds on top of what we're doing, in our sort of bulk mining plan in the 700 complex. So very interesting area. We believe there's potential for this to extend up dip even closer to surface, and it's an area completely unmined. So, and it's relatively close to infrastructure, within tens of meters of existing infrastructure in some areas. And yeah, it could become a new selective mining complex in the footwall of the footwall, so to speak, at McCreedy West. So pretty exciting area. It's still exploration. We're still drilling, and we're going to hopefully expand on what we know already. But yeah, it's a mine that, after all the mining that's been done over all the years from multiple operators, still keeps delivering results.
Yeah, it's pretty exciting. And I've said for a long time that I think some of the best explorers are actually producers when you can actually get underground and start looking at different areas or drill from surface into maybe shallow parts that haven't been mined. And you're really hitting on multiple cylinders here at McCreedy West on the exploration front, just showing that there is so many good still in the ground that are left to exploit. And I'm amazed at how quickly you can turn it around from an exploration plan into a mine development plan. To already be looking at mining some of these stopes in 2026 just shows people listening in how quickly you can monetize your exploration results, where a lot of times with an exploration company, they may be 10 years away, if that, from even getting a mine in place to where they can even exploit it. The exploration results you're putting out are exciting because you can already see the pathway to getting those into production and monetizing them. So a lot going on at McCreedy West, but the exploration hits don't stop there. We have also the Levack Mine. You put out some news just on the 28th earlier this week, and the headline hole: 29% copper, 0.9% nickel, and 53 grams per ton platinum, palladium, and gold over 1 meter. Now, this is about 140 meters down dip from the number 3 zone. We had talked about the exploration work your team was doing below the number 3 zone just in the last interview, and you were making some comparisons to how it could be similar to other periods of time where you've mined this project in the past, and we're down in the Morrison area. And you said this kind of looks like it could be getting down into a Morrison-like deposit. So remind people of these results you put out to the marketplace, what they could potentially mean, and maybe some parallels to that Morrison high copper PGM and gold zone that you've mined in the past.
Yeah, I have to tell you, Shad, in my career, I've seen some great holes. I've been a part of teams that have drilled great holes. I've never been more excited than I am this week when we got back those results. Obviously, it's massive sulfides in the core. It's very visual. You're into massive sulfides. There's no question about that. But the grades that came back far exceeded my expectations, and hitting them where we did, again, really built on this thesis we have that, yeah, this could be another Morrison-like system. So the Morrison deposit was, and originally it was called the Levack Footwall, the LFD. It was discovered back in 2005 by FNX Mining. I was working at the McCreedy West mine at that time. I still remember the day I heard about it. And it really was a game changer for FNX. And that discovery was one of the reasons why FNX was the best performing stock on the TSX from 2000 to 2010. And we moved very quickly from getting that drilled off I moved over to Levack at the end of 2008 to lead the team there to develop that and bring that deposit into commercial production. It was our flagship at FNX, and we were acquired by Quadra FNX, and largely because of that deposit, we produced spectacular grades. We were shipping ore month after month after month at 10% copper, sometimes more, with 8 to 10 grams of precious metals and often, 1.5 or better percent nickel as a byproduct. Where a lot of mines in Sudbury are just happy to mine 1.5% nickel. We had that just as a byproduct that came along with it. So spectacular grades, very successful. That deposit still has a significant historic resource. It is open at depth, and we believe there could be a lot more there. And as we continue to understand the structural controls on these footwall deposits at the Levack mine, I think it'll really lead us to potentially exploring below that and maybe extending it. But this new area is about 600 or 700 meters to the east of the Morrison deposit in the footwall, and where the Morrison deposit, you could say, it was underneath the number 7 deposit and down dip from the main ore body at Levack Mine. This target area we're calling the ROBS 2 or the R2 zone is below the number 3 ore body, and then above that's the number 1, number 2, and then the number 3 ore body. But this is underneath that, so it's within the Levack mine, but underneath different contact deposits. And there's very much, our interpretation is it's structurally controlled. There's some structures there that are more north-south trending and seem to have a strong control on the Morrison deposit, and they point directly and run directly underneath the number 3 ore body. And this was the geological thesis we had, that if they host and control this underneath the number 7 contact nickel deposit, then where else could we look for another Morrison-like deposit? Well, underneath the number 3, it has all the right ingredients. It's a Sudbury breccia. It has these same structures that control, and it has a large, high-grade nickel deposit above it. So we drilled our hole back in, we started drilling it in May, and we released results early in July on the hole 14A, which intersected about 2 feet of 8% nickel, almost 18 grams of platinum, palladium, gold combined, and about 2.5% copper. And I've said this to you, Shad, before, and it looked a lot like the Rob zone, which is the most upper part of the Levack footwall or the Morrison discovery. And we went in and mined that in 2009, and I can remember us mining on these sort of sub 1 meter, like 1 to 2 foot, really nickel rich veins, where we often have intersections of 6, 7, 8% nickel and 2 to 4% copper. But in that Rob zone, we only would have 2 to 5 grams of platinum, palladium, gold combined. So precious metals were very good, but not really high like we see in other parts of the deposit. So when we got 18 grams of precious metals with this 8% nickel, that was encouraging. We thought that was great. We believe that if it was anything like the Morrison, these nickel-rich areas would turn more copper-rich and massive chalcopyrite at depth. And that really happened about 500 feet vertically below this upper part of the Rob zone. So we said, well, let's test down deeper. So we deepened an existing FNX hole by about, I believe, 400 or 500 meters, got down to that sort of depth area. We didn't hit anything significant in that hole, but it was a great geophysical platform. We did the geophysics on it. It told us that there was a conductor to the north of where we had deepened this hole. So we wedged off it, and that was the wedge hole that we announced on Thursday morning. And it intersected a very wide breccia zone, Sudbury breccia zone, and this is the rock type that hosts these footwall deposits. And we had multiple chalcopyrite-rich intersections, and we announced a number of these in the press release, and some were narrow. They were 30 centimeters, 1 foot. But our headline hole, we intersected a zone with 2.6 meters of almost 13% copper and an ounce per ton of platinum, palladium, gold, which was it was fantastic. Within that, there was a 1 meter, just massive chalcopyrite vein that graded 20 over 29% copper and 53 grams of precious metals. So this, is spectacular. And within that 53 grams, 29 grams of it was just gold. So almost an ounce per ton gold. Spectacular. Like I say, these are grades I did not expect. And even when we look at the Morrison deposit, we've done a lot of comparison to the Morrison mineralization and then what's controlling that and how it transitioned from nickel to copper precious metals. This high up in the system, if it was the Morrison, would not have this high of precious metals. And we put some of that in the press release just to put it in context. So it's a very interesting area. We're going to continue to use geophysics to help us guide our drilling. Right now, we think we are on potentially the edge of the system. So we're going to drill further to the north again with another wedge hole that's underway. And that is going to test more towards where we hope is the core of the system, where we would, if our interpretation is correct, we would hit wider chalcopyrite mineralization, and then we'll test down dip with that. So our goal is to have multiple underground drill rigs on this, as well as surface drill rigs in the coming weeks, and really start stepping down. And we have great platforms to drill this. Unlike the Morrison deposit, where we did not have a ramp down to 5,000 feet, we had to develop that all the way down the deposit. Now we have a ramp that we can drill near horizontal holes if we want, all the way down to continue to use geophysics and follow this system to depth wherever that might go. So it's early days, but very, very excited, very encouraged, and really impressed by the precious metals that are along with this massive copper veining.
Yeah, the beauty of being underground and being able to drill more strategically and more surgically, and the fact that you have all that development and the previous model to work off of, pretty exciting. Yeah, just honing in on that precious metal area even more to the point you made. It was, yeah, 29% copper is nothing to sneeze at, first of all, but the 29.9 grams per ton gold, really eye-popping, but also so is the 15.8 grams per ton palladium or the 7.3 grams per ton platinum. So you have that, and there's a little bit of nickel in there too, 0.9% nickel, but that's over that 1 meter chunk. But then, as you say, it was really a 2.6 meter area, this whole number FNX 6083W1. And so that's pretty exciting that you have the high precious metals content. And if you drift over into a wider zone, if you do a wedge over and you find out, hey, now we have even a wider area, how quickly could you get over into a development scenario in this part of the mine when you do put your mine plan together for the Levack mine? So talk to us about how all this drilling could play into your upcoming mine plan.
Yeah, this is the fun part for me. I'm a mining guy at heart. I'm not a geologist, although I'm passionate about the geology. I'm not a geologist. I'm a mining guy. So how do we extract this? How do we develop it and extract it? And that's the fun part. So there's a number of options we have, and to be honest with you, we haven't started really getting engineering involved in doing some trade-off studies. But we do have the Morrison ramp, which is an open ramp. We can drive down that ramp and actually drive all the way to Glencore's Craig mine next door, and we provide them secondary egress. And that, I believe, is around the 4,500 foot level that we have that access. And I've been down there recently. So that ramp is completely open. It provides a great platform all the way down to set up a diamond drill. And as I said, you can drill, up holes, down holes, or horizontal holes from there that would be 500 or 600 meters to drill it off. We could also then drift with a jumbo drill and drive a drift out there to actually get closer if we wanted to drill shorter holes to diamond drill, or to access the deposit and start silling on the vein, assuming we have a deposit there to mine, but to actually get in and start silling on it. So if you're looking at, developing 600-700 meters of development, it's not a huge capital cost, and it's not a huge timeline when you already have all the power and infrastructure and everything there. So we could possibly get in there fairly quickly and start really touching what we're drilling and seeing what it is. And that, to me, is the best way to get an understanding. It's what we did at the Morrison deposit. So that is something that, we will evaluate. First thing we need to do is get some more holes into this. So that's where getting multiple drill rigs underground, as well as doing some wedges off the existing holes we have from surface with the rigs we have on site is kind of key. But that'll happen over the next 3 months, 4 months. By then we're going to have a good idea how big this could be, have some sort of dimensions to it. I'm hoping that we will be able to make a decision by the end of the year how we would want to approach 2026 in a Levack Mine restart. This is it definitely puts a change in our plans now, a very positive change, and gives us more optionality on how we would want to tackle a restart at Levack. So again, this is the fun part for me. It's a lot of fun. It's exciting, and there's potential in the future, in the relatively near future, to start hoisting and selling some very high grade material from deep within the uh, the Levack mine. So that's an exciting option to have that honestly we didn't have weeks ago.
Well, just as we wrap up, I mean, give people the idea of how things may look maybe in a year here. So fast forward to the end of this year, maybe you get a mine plan together and make a decision on, when to commence things in 2026. But then we're, let's say, towards the middle to the end of 2026, how big of a contributor could Levack be in concert with McCreedy West? I know it's a forward-looking statement, you don't have the full guidance out, but maybe just paint a picture from your past experience how it was when you were operating an FNX with both mines going in tandem.
Yeah, that's a very forward-looking statement, Chad. Thanks for putting me on the spot for this. No, this again, I'll be honest with you, in the evenings when I'm at home and my wife is trying to get me to do chores around the house, I'm distracted by playing around on my computer and looking at all these types of options and running my own little back of the envelope models because that's what I do for fun. So I've thought about it a lot, and based on my experience with the Morrison deposit, once we get into this system, so you actually develop over to it. So let's say that takes, just throw a number out there, 4 months to develop into it and actually start extracting some of this material. I'll call it material for now because it's not ore and it's not in a resource, but extracting some of that, coming in at different elevations, and we have the option of even driving multiple sort of access points quite widely spread out off of an existing ramp. That could allow us to start ramping up fairly quickly. And if we made a decision to do something like that in early 2026, we could start moving on it really quickly. And, there is potential based on a whole bunch of factors that are very speculative right now and may not happen. But if we had, the drilling to support that, we have some kind of a system that has some depth extent and some strike length and potentially some thickness to it, we could move fairly quickly in 2026 where we could see some of this material coming to surface and, sampled and offsite to a mill before the end of 2026. What does that look like? Well, it really depends on, grade and thicknesses and a whole bunch of things. But, it wouldn't be unrealistic to, get into 3 or 4 different levels and start mining some veins based on what we did in the Morrison deposit. And, with that, each blast is 100 tons. You do 3 blasts a day, maybe that's 300 tons. And, that's a start of mining potentially. And when that could come about is hard to say now, but it's always possible you could get some of that material before the end of 2026. Again, subject to a lot of forward-looking things and assumptions, but it's close. It's a lot easier than it was at the Morrison deposit. The Morrison deposit, we started on 2650, which is the bottom active shaft station right now. Started driving a ramp down from there, and we were always trying to develop and have a diamond drill bay in the 2 remux up the ramp to just kind of drill ahead to get some sort of definition as we were going down. The other holes were coming from surface down to, depths of more than a kilometer below surface. So everything was a lot harder there. Now we are close. Some of these intersections are less than 400 or 500 meters from existing infrastructure and at levels that are well above existing infrastructure. So we have the ability to get a lot closer to it and in multiple areas close to it to start understanding the system and then extracting it. So we're in a better position than we were back in 2006 and 7 when we were looking at how to start the Morrison deposit. So hopefully we could move it ahead quicker than we did then.
Well, I appreciate you humoring me, Jason, and going through that forward-looking exercise, but I wanted people listening just to hear, just in a general sense, and there's a lot of ifs in there, like you have to still do more drilling, but just how much easier it could be for round two here than it was in round one. As you say, you were having to do all the development work to get down into the Morrison area the first time in FNX, but now the advantage of having a brownfield site where there's all this development underground is that you can drill from underground, that you can develop from underground, that you can hit multiple areas of it at the same time now, as opposed to being stuck just developing your way down through it. So I just wanted people to hear that in, let's say, like 18 months' time, how transformative this could be at Levack and what a contributor it could be to the overall production profile. Think about 2027 and beyond. So this is not 5 to 10 years away, folks. This is, a year or two away to getting into the meat and potatoes here of the Levack mine. So just an exciting future growth area for the company. And I guess we'll just wrap it up there for today, Jason. Lots of stuff going on at McCreedy West for sure. Lots of exploration there. And then this exploration at mine number two at Levack. So lots of news still on tap for Magna Mining. And for everybody listening in, definitely click on the link below in the show notes. It takes you straight over to the Magna Mining website, right to their news section, where you can follow along with more news as it drops. I'm sure there'll be some updates and we'll get you back on again. I don't know if it'll be 9 days or 19 days or maybe a month, but we'll definitely keep following along with the news flow, Jason. And as always, looking forward to our next conversation.
Thanks a lot, Shad. We will talk again soon.